Well, first of all, the fundamentals behind both gold and silver have not changed one iota.
Hmm.
We're still living in a world of geopolitical uncertainty, a world in which central banks are wanting to increase their gold holding. I think the latest announcement was from Holland, who said they're going to buy some gold. Um, Nations are starting to say we can't rely on having all our reserves in dollars, and they're diversifying, and gold is the obvious way to diversify because it's nobody's liability. But I think it's not. Obviously, there's also the worry that the debt problems of the world are not being addressed.
Right.
Um, Governments around the world continue to engage in deficit financing. They spend more than they're taking in. Europe is now going to be a bit of a problem because of the defence side. Europe has got to spend a lot more money on defence as part of the NATO agreement. Well, dealers they just don't know where the price is going to be tomorrow, so they've expanded their margins very significantly in both directions, whether you're a buyer or seller, because you might buy the metal at a certain premium, which is a very high premium, but the price of the underlying could move that much in a day. We've seen recently we've been seeing moves likes of which we haven't seen in years. Daily moves well in excess of 5%. I think silver today is, if I'm not mistaken, I looked earlier, it was up or it was down 6%. I'm just
Yeah.
looking at the screen now.
It dropped
Uh,
it dropped pretty hard today.
Yeah, I mean, so the metals have been. We've had days where they've been up 5, 6, 9, even 10% sometimes, and then down as much. So if you're a dealer, what are you going to do? You don't take in stock because the price might plunge, and you don't sell stock because the price might soar. So what do? Either you close your doors or you widen your margins. I think that's what's going on. All the dealers have widened the margins. In fact, I've just agreed to buy some gold myself today. I haven't paid for it. I'm paying for it tomorrow, but we fixed the price, and it's on coins. And the margin is the highest margin I've ever paid on a gold coin. Normally, I'm paying around 150, 125 bucks over. I'm actually it's in Swiss francs, but Swiss francs are worth a bit more than a dollar. This time, I think it's getting on for 350 or 400 bucks over.
Oh, geez, that's a lot.
Yeah. Well, it was in this case. I'm buying a gold coin which I actually wanted, but that is the official bullion price which this gold dealer is selling at. He's not selling it because it's a rare coin. It's not rare. It's just what I
Just
happen to want the actual year. Whenever you have a large movement in anything, you get a series of ups and downs with high volatility, just like we're seeing at the moment. And that has a tendency to trick people into taking the wrong position. So there will be, undoubtedly, an awful lot of people who've gone in at the high point, come out at the low point, then they see it turn around going up, they bought in, then suddenly it turns around on a 6% and goes down. So there will be a lot of people who've been making wrong decision after wrong decision after wrong decision. It's not their fault. It's actually the way the markets work. The
right.
markets kind of see what you're doing and then try and trick you into doing it. Then it does the opposite of what you expected. It's a funny old thing that. I'm going to tell you how to manage that, because I think that there's an awful lot of people who would like to trade gold. They're afraid of buying it in case it goes down, and if they have some, they're afraid of selling it in case it goes up. But whatever they do, they're probably going to make the wrong decision. So I want to tell people how they can manage this so that they won't make a wrong decision.
Right.
So the answer is, when you're doing something in a volatile market like this, you have to do it very gradually. So if you're minded to increase your gold holdings or your silver holdings, don't go all in saying, I'm going to put all the money I've got into gold now. If you're buying, you take a little bit and put it in, and then the market doesn't actually know what your next move is. If it goes down, great. You can buy a bit more at the lower price. If it goes up, well done. You're a smart cookie because you got in a bit earlier, and now you can buy your next lot. And still, even though you just bought the next lot at a higher price, you're still well below your average price is well below the price you just paid. You're a smart
Right.
cookie either way. Yeah, unfortunately, many people can't manage that because they're very excited by what they feel. Either oh, it's going up, it's going to the moon. They're super excited. They throw everything they got at it, or they're super despondent and they say, "Oh no, it's going to break down below to such and such level," so they sell everything, and then it turns around on 6 months and goes up, and they say, "But it looked like it's going down. Why is it going up again?"
Yeah, no,
It is, and that's why I say it doesn't matter what you're dealing in. Right now, it's gold and silver for everybody, but deal in small quantities, which gives you a second chance if the price goes against you to get that second slice or third slice. You go in more than once at the price, which might be better or worse, but it doesn't really matter which way it is. You're never going to be the last fool because you won't have paid the highest price if you're buying. Well, first of all, the fundamentals behind both gold and silver have not changed one iota.
hmm
We're still living in a world of geopolitical uncertainty, a world in which central banks are wanting to increase their gold holding. I think the latest announcement was from Holland, who said they're going to buy some gold. Um, Nations are starting to say we can't rely on having all our reserves in dollars, and they're diversifying, and gold is the obvious way to diversify because it's nobody's liability. But I think it's not. Obviously, there's also the worry that the debt problems of the world are not being addressed.
right.
Um, Governments around the world continue to engage in deficit financing. They spend more than they taking in. Europe is now going to be a bit of a problem because of the defence side. Europe has got to spend a lot more money on defence as part of the NATO agreement. So that means the defence budget across Europe is going to be going up for governments which are already heavily into deficit. And what that means is that the debt will be increasing at a faster rate than GDP. And so, why are people buying gold? So, historically, people would buy gold and say, well, it's not really if they had any at all, it's just sort of like my little keep pace with inflation asset. But I
Right.
don't think people are looking at inflation anymore. I think they're starting to say, I don't need, it's not a question of inflation, it's a question of insurance or parachute. If things go badly wrong with the debt or with the currency, I want I want to have something which, one, I don't need to ask anybody permission to own it.
Right.
I don't have to go down to the bank and say, please, would you give me my money back? I don't have to go to the government and say, can you give me something? I've got something which is my own, and I don't have to ask permission. So if we do get into a chaotic situation, everybody and his brother will want to take that gold or silver off you for sure. Not today, because nobody knows what it is. But if we go to a chaotic situation, everybody will want it. So that's your first thing. But the second thing is people are saying, what if this chaotic situation which we see coming with the debt leads to, let's say, a very serious situation of hyperinflation or capital controls or rations or a bail-in where you're forced to put a certain amount of your assets into government bonds or some sort of exchange controls. There's a lot of scenarios out there, but if you have the gold, it's it's nobody's liability. It's
Right.
yours. So I think what's going on is people are saying, I'm no longer holding it for the inflation hedge. I'm holding it because I'm front running what I fear is coming.
hmm
I fear something bad will happen, and therefore I'm holding the gold, and I don't care what price I pay for it. I'm holding it because something bad could happen. It's kind of like being on the. If you imagine you're on the Titanic, okay, and it struck
Okay.
the iceberg.
hmm
You might have been. There might not be enough life jackets on the Titanic, but perhaps you've been trading life jackets and making a bit of money. You bought some, you sold them at a higher price, and as you got closer to the iceberg, you could get a really high price for your life jackets.
Right.
So you sold your only life jacket for a much higher price because the iceberg's looming, and then it hits the iceberg, and now you'd like to, you're saying, well, actually, it doesn't matter. I want to buy it back, and the price is irrelevant.
Right. Right. Because you need to save yourself. That's it. It's the chaos point.
And a lot of people say, look, whereas this makes no difference to hitting the iceberg. I need to have, I need to have the equivalent of the life jacket or the parachute. If your plane has the engine has just died, you need the parachute. And if there's less parachute, so there are people on the aeroplane.
Right.
There's no price. You don't care that you're paying over the odds for it. You say, I'll have it anyway. Well, I don't really see it playing out in that way because a lot of what we consume today is not consumed as a result of scarce manual labor.
Hmm.
It's produced by robots, machines, and computers and so forth. So the labor element, which is a scarce element, is not a big component. And also the raw materials aren't that scarce because we found ways to manage the supply and increase the supply when the demand goes up. So I don't really see except I don't really see a Weimar type situation in terms of the things we consume, but I do think we are already in the early stages of a Weimar type situation when it comes to rare assets, things that people would like to own, need to own, desire to own, but which are in short supply. That includes equities, it includes property, it includes potentially Bitcoin. Of course, we're at a very low point in Bitcoin at the moment, and it includes gold and silver. Of course, it includes paintings, collectibles, and all kinds of things that people want. Houses by the sea, it doesn't matter, but everybody wants more as they get older, and certainly as you go into retirement, you're going to want to have a comfortable retirement, go on nice expensive cruises. Perhaps you're going to want to have a nice nursing home or a pretty nurse to look after you. All of these things cost cost money, and the amount of money they cost is rising at a much faster pace than the CPI. And having said that, we've got a distorted market. If we talk about the stock market, we've got a bunch of stocks at the high end which have got rather high valuations and have created what I would describe as suspect earnings through this tactic of what I would describe as vendor financing. So I'll just describe how that works. If you are, I won't name any companies here, by the way, and it's not investment advice, but if you're a very large company and you've got something to sell
Right.
related to AI, for example, you can then find a company which is also in the AI business and can use your product, but doesn't have any money. So what do? You say, we'll buy shares in your company, so you've got a ton of money,
Hmm.
in exchange for which you agree to spend that money that you get on our microchips.
Right. Okay.
So that's great. The seller of the microchips is now in really good shape. It's got a huge profit. It's got sales. The earnings per share go up. The directors can unload their share options at really fantastic prices. The company which is in the AI world, which is on the receiving end of all this money, is happy as a lark because it was struggling to pay the bills,
Hmm.
and now it's got the money, so they're happy as a lark. But let's step forward 2 or 3 years' time. If the AI company which has received this money to buy the chips isn't actually making a profit yet, those shares aren't going to be worth much. The
Right.
shares which the company invested in. So what the companies who are engaging in vendor financing potentially are doing is swapping future risk, because they're taking on a risk that they won't get paid in the future, which is bad luck for somebody holding their stock in the future, but in exchange for current profits, which is really great for the current shareholders, the current directors.
Hmm.
And of course, we don't know, whether this risk will materialize or not. That's another question. But it is said that a lot of these companies on their AI ventures would need to charge more and have a larger number of users to actually become profitable on their AI side. So it is debatable whether they'll get there.